The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman on this, the 4th day of November. My pleasure to be here because we've got the countdown to the election. Might talk about that, maybe yes, maybe no. Let's go straight to the market. We've got the Dow up 25 at 17,956. The S&P is up 6.88 at 2095. The comp index is up 17 at 5,075. You've got gold. Let me just check this out. Right down there, gold is up about 50 cents at 1303. This is going to be very interesting because suddenly there was a report about crude oil and crude suddenly spiked up. I think it's going to give it back, whatever. I don't know what the news is, but there's a glut out there. So anything they say should be taken as just momentarily positive. And that's it. So the crude oil is up. No, it's down 27 cents now at 44.39. Hit a low this morning at 43.57. It's a start, but I'm going to go through these charts in a moment. I just want to get through the numbers because it's important. We've got the TLT up 76 cents at 131.33. Kind of make this cluster formation here. It's going to be very important over the next 5 days. What happens to bonds? We'll talk about that in a moment as well. And let's go to the dollar, the DXY right now. It's trying to form some kind of a base here at 97.11, down to 5 cents. Okay, I wanted to get all those out of the way. Let's now do a couple of things. This is Technical Friday. I promised that I would show a chart that if I came across something like this, I would talk about it. So let me just show you FFIV. This is F5 Networks. So the daily spiked up, it gapped up the other day after making a peak E-top back in September. It gapped down, in fact, towards the 115 area. And then it held quite steady. And then it had what we call an island reversal. So there are a couple of things I want to talk about. Spiking up to a peak D, that's because the low of the 11th of October at 121.22 gap down the following day to a high of 119.29. And then it had all this trading below it. And then the last day of strength was at 120.74. But remember, the low was 121.22. Then all of a sudden, this obviously good news, maybe earnings or whatever, spikes to the upside. And now it's got this huge trading range to the top. And in the weekly chart, has it recycled to a new A? Is this F/A or is it an F? That's all that we can do now is say it looks like it has that single leg A up formation, far above the 200 period moving average, far above the 9 period moving average. You should give back some, but it's at 136.77 down $1.04 after spiking to 139.08 yesterday. Let's watch this because if it comes down to the under 132, it's a problem. If it stays above there all the way through Wednesday of next week, and in fact makes higher highs, this is a stock that's telling you it's doing everything right. I wanted to show that for not that reason. This is the reason right here, because I have a lot of people who use the Chapman Wave methodology. This went to a peak G from the lowest, most identifiable lowest low way back in 2000. And then it spiked up to various highs. I go to a peak G, July of 2007 at 46.94. But then it comes down and it goes to a low of $17.70. Now, I looked at this and I saw my wave count. I said, okay, my eye says that that's a higher low. I've just done it so long. And lo and behold, it is a lower low on the in October of 2008, above the low of April of 2008, but it's only by 7. So we've got 1841, and the low was 1770 initially. Okay, good. So now we go A, B, And I'm looking and I say C. Is that a peak C1, C2? For those of you who know, who've been following all that work that we've done over the years on the euro, how I started to define more and more and more that peak Chapman wave, peak C1, C2, slight failure, slight. It has to be a slight failure. Could be counted as a D. And then we saw those pullbacks after that. And then I thought, no, I've got another beautiful A, B, C, D. And now it's running up to an E/B. Excellent, excellent action. I have to go back. I must have missed something. And lo and behold, I'm looking, I said, there it is, right there. January of 2010, 56.19. February of 2010, 56.16. And lo and behold, the Chapman wave methodology comes through again with that D. I just, something was wrong. When you do enough of these charts, you get to know when something is just not quite right. And there it is. And then you had that single leg A up, spike. So you know that it's got the characteristic of a single leg A. It can do that. And that goes to an A minus. Why? Because we went to a lower low and then started a brand new move in 2030. Just wanted to bring that up for those of you who like to study the Chapman wave methodology. I thought I'd bring that up because I had spoken before and said, what's with those peak Cs? And this really explains it. Now, a couple of things that I want to do. Within the context, I'll show you the 10-minute chart right here. Here's a 10-minute. Consider this to be aberrational. In other words, this is what I call dartfish day. That means there are quick moves, little jabs where the fish goes one way and you think, oh, it's going to break out and take and stops dead. Then it goes back the other way and you think, oh, it's going to break down. And then it goes up and just keeps chopping around. So this is a very interesting session because under any other circumstances, let me now go to my what I wanted to talk about. We've got a Chapman wave 5 in the 120-minute chart going to a low today of 17,887. In the arch formation, you've got this trend line that was pierced, but it now needs to get back above it, and it is above it. Okay, so that's the 10-minute. By any measure, in the volatility index has gone to an F right now. You can even recycle it, but it doesn't matter. It went to a high today at 22.99. Let me tell you, any other time we've been at 22.99. Believe me, we've been going close to some kind of a major reversal. That's number one in the market, at least for 3 to 5 sessions of good upside action. Number two is within the context of my having studied the VIX index for just ever so long and used it for ever so long. This is aberrational in the sense that it was the buying of insurance that people were not interested in the market right now. They're buying insurance for next week. That's the only way I can assess it. So it says to me there should be a bounce. That's the next thing. Another thing also is that the volatility index, just as a number, where did it go? Right there. The volatility index, VIX.X, has, unless I have to give it an alternate count. I really don't like to. Everything about it says it's probably a peak F, but I'm going to go F/B, just to be as conservative as possible. But in the weekly chart, this is a C, and it's a whopper. And the Dow has only pulled back like 2.5%, 3% in all this time. Something's wrong with this picture. There might be a surprise to the upside in the market next week. We'll talk about that as soon as I get back. About the Chapman target condition, Dow. Got a lot of questions that I'll deal with.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. run. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So here's the VIX index at 2162, down 46. I think it's going to close towards the lower end of the day. Most people, anybody who was really thinking about buying puts or buying some insurance, I think they've pretty much done it. Today, what are you going to do? Monday and Tuesday, you might not get the best prices. Okay, so I got a bunch of questions. Let me get to them. Number one is crude oil. Now, let me tell you something about crude oil. Crude oil moves very quickly, and it has been moving quicker than ever recently because of the big moves down from the 43s all the way up to the 52s peak D in the Chapman wave, turns around and comes all the way back, and this is only a leg B. But the leg Bs, in a very sharp move to the downside, can allow for a sudden spike to the upside. When you've taken 52 to 43, so that's, what are we talking about? We're talking about, be conservative and talk about it as 8 points. And 8 points on a $52 stock, that's a lot. That's for 12, 13%. There should be some kind of a rebound. But we're talking about a market here that says, within the context of what's going on, most people in the market have either positioned themselves, this is what I'm thinking based on what I've been looking at, have positioned themselves already for a worst case scenario. I'm not sure how many people are talking about a best case scenario. We might find that overnight the futures, they could pull back sharply, and by the morning they could be reversing back up again. A whole bunch of things could happen. We could see the futures hugely up in the evening, and by the end of the day on Wednesday they could be down. This is an area where, under any other circumstance, if I'm looking at the crude oil, what I'm looking at here is crude oil says to me both in the weekly and the daily, the weekly and the monthly, that there could be a rally in the daily to the 46.80 level where the 9-period moving average is, and then all that'll happen is it'll say crude oil is stuck in a trading band. That's number one. Number two is, within the context of the monthly chart, you've got your arch formation. So far, it's holding. I'm going to be fairly straightforward with this. It's holding that resistance point right there on those three from the low that was made back in February, 34.70 on the continuous contract, and now you've got a succession of lows. If you want to be very strict, yes, we've actually pierced it this week, but we haven't closed below it. So this says to me, it's a very critical period because if crude oil is going to rally, and the question is, what should I do? To tell you the truth, I can see a bit of a bounce. I can see just a little bit more on the downside. I think a lot has been done in crude oil. So if I was to do anything at all, I'd hold off for at least another day, all the way through Sunday night, see what happens. Then, of course, you got Monday, Tuesday, Wednesday. I don't know if I'd take any big positions right now. It does look like crude oil could bounce a little bit, but I'm looking more at the dollar, and I'm wondering what's going to happen next week. Will the dollar break down, or is it on its way to try to get to 100.52, my target, longer term on the dollar for leg D? That's the way I'm looking at it. So I'm sorry, I really can't give it to you. I can just say, based on the USO, it's exactly the same analysis at 10.03. I think the chances are just at this point, 1 point down, 1.5 points up over the period of the next week and a half. And that's what I'd kind of be looking at. All right. Now, let's go to the next question, which was, this is very interesting. So Greg has a TBT. I'd like to actually read what he says. Morning, Basil. I won't be able to call in today, but we'll be listening. Could you look at the TBT for me? I have a starter position at 130.133. TBT is what? The TBT is the ultra short Lehman 20-year T-bond treasury. And it is in leg D up in the weekly chart at, whoa, I think a TLT. Could you look at the TLT? I think that's what he meant. Wait. Let me just get this right here. He's got the number of the TLT, but the actual doesn't matter. I'm going to do them both, and I'll tell you why. This is a very important moment for interest rates, and I'm going to go to it in a second. So I have a starter position in 131.33. That's the TLT, but haven't got the pullback I expected. I have a peak E in the daily. All right, so let's just do this. It's a little confusing because I have that. Here we go. So here we go. This is the TBT, and it's got a peak A right there, a peak B, a peak C, a peak D, and a peak E. I thought that's what he was talking about. Now I understand exactly. Okay. He mislabeled. He said the TLT when he meant the TLT, not the TBT, and all the analysis is based on this TBT having made a peak E, reversed at the 200-period exponential moving average, a leg D in the weekly, a single leg A in the monthly. The question is, let me open this up. You always want to have the big picture. Look what's happened. That resistance from way back, is that a bar? Yeah, 35.15 on the 23rd of June this year in the TBT, and the high that was made just a few days ago is 35.08, a little bit below it. If I was to do a left side, right side price time, I'm not going to. I don't have time in the sense that I don't have time because I really want to get to the TLT. So the TBT says, I'm holding very well considering I've just made a leg E. My MACD is turning down a little bit in the daily. The CCI is turning down. The stochastic is down at 63%. It's been held up, but the technicals suggest that it should be pulling back a little bit more. The jobs report that came out, it's really earnings that were a little bit better. The jobs report is saying, under other conditions, if it wasn't for this whole election thing, right at this very moment, the Dow would be much higher and the TLT would be pulling back because the TBT would be running further because if things are good, then you can raise rates, right? Now let's look what's happening. The TLT at 131.44. I'm going to make this suggestion. So I have a peak E daily and leg D weekly. That's right, on the TBT with a peak D if we don't get over 35.07 today. Correct. I consider what I have now as a core position that I could hold for a long time and would like to add on a pullback. Right now I have my stop at the entry point and need help in setting a longer term strategy. So Greg, this is what I'm going to do. If I do have time for this, I want to do it right now. Because there is just so much that's going to be impacted by the election results on Tuesday night, unless, of course, you're going to bring in the Electoral College. that I have on my weekly chart in my TYX, I've got it right at resistance. So I'm going to do this. I'm going to say to you, Larry, if we're going to look, because I think there's something in the economy that is not very good at all. I also see some parts of the economy that actually, like Alcoa and the steels, are still holding pretty well. Oh, that reminds me. One of our dentists, I just had a notice a moment ago, lost his mother. And we're a wonderful dentist, really an important member of our community, our tiger community, and our deepest sympathies go out to him and his family. I'm so sorry to hear that. So let's go back to this. So we've got leg D, a reason why I'm talking about, he always talks about the interest rates. And this is a leg E in the weekly. I think I need to take a little bit more time because I need to extrapolate from this information what should be, what might be, what can be. I'll be right back. Dow's up 32, S&P's up 7. Basil Chapman, Tiger Tickets.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I've got so many questions. They're really good questions. So I'm going to say, look, when it comes to the TBT, Greg, it's really the TLT. I think you were thinking TBT. You gave me analysis, but the TLT is really what you have. I'm just going to recommend for the moment, hold tight. I'm going to do a lot of work over the weekend. I'll be sending subscribers a whole bunch of things as well. But on Monday, I'm going to have a little bit better picture that I can give you because I need the weekly close and then I can do my analysis. I'm looking at a weekly chart, but as it stands right now, everything about the TYX suggests that it should be pulling back and that bonds should rally. But that would also imply that if bonds rally, then there's a chance that the market might rally. So I need to talk about that because if there was an election on Monday, I would be wanting to buy with both hands right now because that VIX index is going to come down at some point. In fact, it could even go to 60, but at some point it'll go back to 15. So I don't want to be there for that move to 60. I'm just saying that's the way I'm looking at it now, at least a short-term bounce. But if I look at the monthlies, and I need to do this just to explain where I'm coming from. If you look at the QQQ series, we've got a test of the 113.63 low of September, and we just did that today. We broke under it and we're closing above it. That's the target we've been having all the time. And now the weekly chart it's going to have to be a spectacular move by 4 o'clock. I can't see it. This is if it's a peak F in the weekly chart. No, we can only get a bounce. And let me tell you something else. The aberration of the put buying is put buying. Don't be confused, because this might be one of those times where the VIX could in fact decline, but the market needn't have anything more than a bounce. It could unwind really quickly. So there's no need to go out on a limb right here where there's not a single person that can say with 100% accuracy who's going to win. Just a real brief thing. I don't really have time for it. I was going to talk about it. I did this for my subscribers. I spoke about it. What happens when two parties have a third? When a party has two terms and then gets the third term, it's never very good. That's number one. I also gave a political scenario. I don't want to give it all over again. I wanted to add to it today. I'm not even going to add to it. I've done that. I've done the analysis, and it says to me that a year ago I said my analysis said this is when no one even thought it could be. I said it'll be Hillary and Trump, and that you've got to watch out for Bernie Sanders as far as Hillary's concerned, and as far as Trump is concerned, what you've got to be thinking of is that he's fighting a single person. He's going to fight an incredible machine. And it's a machine not only of politics, but it's a machine of the Democrat Party, because they have learned over the years how to get people out to vote. I also said to my subscribers from my webinar the other day, this could be one of the few times that we see that the non-voters, the stay-at-home voters, are huge. Unless something really exciting over the weekend happens, there are a lot of people that are just not going to vote. They're just going to say, you know what, I can't choose between these two, I'm not going to vote. So there's a scenario for both. I'd rather talk about it more on Monday or maybe even Tuesday. But I had questions and I'm going to go to them. So CLD. So I'm not going to do anything yet about the rates other than to say my thinking is that based on the technicals, the market should have rallied or should be rallying strongly, and bonds, in fact, should be, yields should be pulling back and bonds should be rallying. All right. And the dollar should be rallying and stuff. Now, I used to have CLD done all very nicely, Cloud Peak Energy. No, I've never done this ever before. A, B, C, D, E, F, G. I think it recycled. A, B, C, D, instant restart. Let me do that. I tell you what I'm going to do. I'm going to put this aside just for the moment so that the next break, I will actually notate it. But I'm also going to say, the question is, what was the question? Larry? Can you look at CLD Coal Company on your show today? I'm looking for a good place to buy for the long-term IRA portfolio. It looks like the weekly is a leg G, but the monthly is only a leg B. Ah, very good. That's exactly what I was talking about. What's your analysis, and where would you look to get in at? Thank you, Larry. Larry, I'm going to say G/C, because the MACD is still good and the stochastic is good, and these patterns invariably go to G and then pull back, and it's at G. So I don't want to do anything right this moment until it's down a little bit more. I'm going to try to do that during the break. Let's just move to some of the other things. So Julia, the crude oil, gee, I'm holding back today a lot. Usually I just come out with these things. GT wants to know about GE and BA. All right. GE should be running. Yep, nice move. Oh, 51 cents up, 28.79. This is so critical because why? As I said to subscribers this morning, GE is underneath the major up channel inside track support level. To close, it has to close way above it. So to me, this is also a very good sign, a market sign to say, yeah, there is in fact strength there. What if the market is fooled and we actually rally instead of crashing 900 points, which the VIX index is indicating it should? Well, I must say this is good action just on the day for GE. On the week, we'll have to wait for the close. It's not a great candle, but it is at least an attempt to find some kind of a base. So let me just say, GE closing under 28 is really poor action. GE bouncing this coming in the next few days above 28. It has a 29.57, 29.63 area that it has to break out, and then 29.90 is the 200-period moving average. I don't know. I'm going to be doing some work because let me tell you, GE is a stock that I'd like for my subscribers to have at some point. I just don't want to step in front of a freight train right now. The risk is there, but if the market gaps either way and you have stops or buy stops, you want to know you're in at a good point, because by the time the market opens, you want that security, and I don't think you'll have that right now. So GE is acting well. Boeing is very interesting. It's in the aerospace. I think the aerospace right now is looking very weak. If you look at the PPA, it's just fading. It made a peak G probably in the weekly chart, but the monthly chart is the one that says to me, hey, we could pull back, have a consolidation after some of these aerospace stocks have had such a fantastic gain. But at the same time, what we're really looking at is the monthly chart is suggesting we should go higher, unless there's an alternate count. And even then, that would be C, and that still says higher. So I'm looking at this, and all I can say is, so the question is, charts, so yeah, we go again. BA, here's the chart. BA made a peak F top of 146.23, pulled back pretty sharply down to the 138s. Now what's really important is that having bounced to 140.72, what happens next? The weekly chart says, I usually do this, I grab that, and I grab the outlet candles, and I just say, hey, rectangular formation, and it should trade within that rectangular formation for a little while longer. So if Boeing breaks 148 to the upside, that's really positive. If it takes out 135 to the downside, that's saying, uh-oh, time out. But in the meantime, I'm kind of neutral on it. I don't have a position in Boeing. I think the weekly chart tells me, it says sideways action. All right, I hope that helps you. Next question was ACIA, which is Acacia Communications. You know, I looked at this recently. I still don't see anything, but right here is the first time that maybe it's going to find a base. That's another one I'll look at when I get back. Basil Chapman, Tiger Technicians Hour. Time now to do CLD while we're away in the break. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back. So we're going to go to CLD, which is trading at $6.36, down 19 cents. This is a Cloud Peak Energy Inc., and it's in the coal area. Now, the question really is, do you anticipate that if Trump gets in, coal will be favored? Coal's already had a spectacular move. Look at this. We spoke about this the other day. Let me just show you something. KOL has gone down 90% from its high. That's the Van Eck Market Vectors Coal ETF. And it's had 160%. No, it's actually more than that. It's about 162% gain just this year. So has it already anticipated? Now we're going to get a pullback because it's overbought? Or will it just start off from here to go higher? You know, a lot has to happen in any administration. It's months before anything really takes place. So I'm just going to suggest, I'm going to go back to CLD. Larry, if you are looking to buy for the longer term in an IRA, because it's longer term, then also have the patience to wait for a pullback. And it's at $6.39 right now. I would only be comfortable saying to you, this is where I want to study the chart rather than to buy it at this particular point after a move that went from just about 1 to 6 3/4. I mean, 600% gain. I do feel it needs to pull back. So I'm going to say to you, because it's an IRA, I would not mess around. You could grab it here. If I really had a target and the target was in the 10s, I say, hey, doesn't matter that you buy it at 640 or 590. No. But I tell you something, I'd rather be buying it when it's tested support, because if it gives way, let's just say it's a Clinton administration, coal could still be in the doghouse, and that means that 510 low back in October could be tested and broken. So I'm just going to say to you, hold off, have patience. If you don't mind, call me next week. Let's wait for the election to be done with, if it's ever done with, and call me again. And yes, I am taking calls. I'm sorry, I didn't see that. Maybe it was just covered. So yeah, that's good. So CLD trading at 640, Cloud Peak Energy. I would hold off. I'd like to look at it again at about 615 to 590. If it's for an IRA portfolio, it has to be a really good reason from here to actually go even higher. So that's what I'm looking at. Charlie in Framingham, how are you?
I'm well. How are you?
I'm very well, thank you.
Basil, I hope I don't lose you. I'm on Route 20 in Weston. Hello?
Hi, I was going to say, not unless my tennis games really get bad.
Okay, well, here you go. Gold mine is short. I hope I had the symbol right.
JDST.
Yeah.
So the JDST is the DX Junior Gold Miners Bear 3 times. Now, let me just put this thing into the context that I would prefer. Um, as I'm looking at it right now, because we've got 3 days to go, 4 days to go. Let's see, what is this? 3 market days to go. We've got the rest of the day, and then we've got Monday and Tuesday. So it's 2.5 market days to go. I'm inclined to say between the dollar and gold, I'd probably be a little bit light. Now you've got the 3 times long, and it's working for you, right? You've got a little bit of a profit, right?
Yes.
Now, did you intend to hold this, or did you intend to just get out of it by the end of the day?
Not the end of the day. You know, I noticed I had a bit of a profit, a few $100. So but I'm in the car, so I don't like doing the trades on the phone. But the bottom line is, you know, if it's going to go higher or possibly higher, then I would go ahead and sell it today. If it's at the same price as I had it, probably at the end of the day, I'd probably sell it. I know it's volatile.
Yeah, so it's trading at 25.10 right now, up $1.57. What was your entry price?
Can't remember. I think it was maybe 24.03.
Okay, all right. So if that's the case, were you able to put a stop on it or not?
I didn't put one in because it is so volatile, and I knew it would come back.
Okay, the way let me do this, because you're in the car, you're not going to do anything about it. I'm a little concerned right now about taking 3 times positions unless you're intraday trading and just grabbing your profit, and I'll tell you why. Because the news that something's going to go, both parties, or at least one of the parties, has to have something out there that they're just waiting for, that last over the weekend blast. So anything can happen to the dollar, anything can happen to gold, anything can happen to the market, to the futures. I'm not sure, because we've got so much out already that the market will take it seriously, but you're kind of vulnerable to that. So I'm just going to say to you, when you finally get back and you're able to do something with it, if you have a profit, I tend to take that profit and say, you know what, I traded it beautifully. I was kind of lucky. I was in the car. Anything. I'm done with those days where I'm in the car and I'm holding a position 3 times long or short, because it's so quick. And even if you're able to do it on your cell phone, that very moment is when the cell phone might be a little delayed or something's going on. So I'm just saying to you, yeah, on the 10-minute chart, I can see it's doing nicely. It looks like it really wants to target the high of the third, which was at 25.99, which you'd love, I'm sure. But at this point, it's also just it's just sort of stuck, and gold showing a little bit of strength, and the dollar is kind of stuck. I'm just going to say to you, if you're able to get back and you're able to do something and you've got a profit, either put in a stop and put it just a tad under where you've got it. Now, holding it over the weekend, wow, this is, usually I'm not shy to say, yeah, hold it or don't hold it. This is one of those times where I don't think I want Sunday night exposure to anything. Just relax. We're going to have enough tension coming up in the next couple of days. I would take my profits and just let it be. And if you know what, gold pulls back sharply, and this doesn't, you're not in it, you've at least made some money. You're living another day, and you're free to not worry about it. That's just what I would say. Get out of it today if you can, for a nice profit.
Yeah, no, I'm glad you said that, because that gives me the perspective that I appreciate and respect. Thank you.
Yeah, and it's not just that. Sometimes, we need someone just to articulate what we're thinking and just to confirm it. Or else, if I'm not articulating what you're thinking, then I always say stick with your plan, because you're the one that took the trade. But I just wouldn't want that exposure. Even if it had to work out fantastically, it might not. And then you're stuck over the weekend. It's not good. Thanks for calling, Greg.
What could happen next week? You're right.
Thank you, Charlie.
Basil.
I always appreciate that. Let's go to Greg in Austin. Greg, how are you?
I'm well, thank you. How are you, Basil?
I'm very well, thank you.
Good. Hey, I'm waiting patiently to short the UNG, or natural gas. And the last time I went short, which was back on the 31st, it came close to getting back up to the 9 EMA, but I still got a good chunk of it and did okay. So my question is, where would you look for that, and do you think it'll just come short again of the 9 EMA like it did back on the 31st.
One of the things is I had a peak F in the Chapman Wave a weekly chart, and it plummeted from the 3.7 something area down to the low of yesterday. So this is exactly the area. It's almost like coal, and if you've traded the UNG, you know it kind of moves very quickly. Can you hold on? Are you able to hold through the break?
Absolutely.
Okay, so I'll be back with Greg and Austin. We're looking at UNG, Basil Chapman, Dow's up 19, S&P is up 487, Dartfish Day.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, we're back. Dow's up 22, S&P's up 5. Just Dartfish Day, a little bounce here, and everyone thinks it's going to move that way, then a little bounce the other way. Everyone just in a trading band. Okay, so Greg, what I'm looking at here is UNG, that's natural gas, the United States Natural Gas Fund, trading at $7.49, down 8 cents. It's had a tremendous move to the downside, and you're absolutely correct. Just there was that opportunity, boom, and it tried to break above the 9-period moving average to the 200-period moving average on the 31st. It stopped at 8.45 and then boom, down again. Now it's getting very close to some kind of a bounce, almost looking like crude oil, almost looking like a number of different things, trying to find some support. So I would, if you're looking to short, I would hold off. Not only that, we're about to get into the season, the cold season. It's been fantastic. Even today is a beautiful day here in Boston. So I'm going to just say, hold off on the short. It might be that this is the perfect time because it just keeps going down. But if my eye is correct, I'm looking at 793 to 820 as a bounce. Right. And at that point, if it starts to fail, give me a call and we'll look at it and see if that's now the reshorting spot, or it's finally turned around. It's going to have a winter rally This is tough. It looks to me like there's a glut of natural gas because it's not acting very
just
well.
like oil.
Yeah,
Just like oil. And
right.
so it's in a C leg down in the daily, I believe, as well as the contract natural gas. So I was looking for it to go to a D, and that's what that was the next down leg I was hoping to catch.
Okay, so all right, but let's still wait for the bounce because it's at a huge move to the downside. I wouldn't get carried away shorting until I can get it way above this level now. Hope that helps you.
Yeah, it does. Thanks.
Thank you very much for calling. So, folks, just before we're about to wrap up, because you've got a great program for the rest of the day, I had a question about Merck. It's very important. Let's look at Merck. It's been one of the darlings of Wall Street for so long. Now it's made a peak D in the daily, peak F in the weekly, leg D, probably a peak D in the monthly in the U-shaped pattern. Be careful of the pharmaceuticals. Even if there is a new administration, it's going to take a while. Look at this, Pfizer. Oh, my God, it looks just horrible. So be careful. Now, let me just do this. The VIX index, I'm going to go to this again. The reason why the VIX index is moving is that there's been some buying support. I don't think it's the Fed. I just think that there's been buying support here in the market. The VIX is an independent being right now. It's as if someone stepped into a store and it said, VIX for sale. And they've run into the VIX store and they're buying because they're just trying to buy to ameliorate any downturn. But the one people are saying, we might be just business as usual. I'm going to kind of hang on. Those are the people that are supporting the market. So when we're looking at this, be very careful because under every other circumstances, when we've had this major move to the upside in the 20s in the volatility index, the Dow has been down way over before 500 points. It has triple-digit down moves on those days. It's not doing that. That says, what's the other side of the coin? You know what I think is going to happen? I think we might still be in a trading range in a week's time. Can you believe that? All right, I'll have a lot for my subscribers over the weekend, and we have some short positions. We are short the Dow still, and we'll see exactly what's happening because we've picked certain sectors that seem to me to have some deterioration in the technicals, and we're going to stay in those sectors as shorts for now and maybe add on any really good pop-up. So, folks, have a wonderful weekend. Two things that are very important. Expect anything at this particular point, and the voters are actually getting kind of tired of everything, so it's going to take a huge amount to make any difference. I think most people have made up their mind. I think there's going to be a lot of non-voters, and I think there's a lot of impact coming here from the implications that are going on, not just politically, but not just socially, but legally. And we're going to be seeing that unfold for quite a while to come. So don't get too excited. And maybe it's the electoral college. Maybe we'll have another 2 or 3 weeks to go. Hey, have a wonderful weekend. Enjoy it. That's the main thing. I'll be back on Monday. And for subscribers, some opening call. And if you haven't subscribed, you can get my webinar. It's pertinent to exactly what's going on. And that webinar will give you 30 days to my service. Thanks for being here. Basil Chapman.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.